Hi, and welcome to another episode of Nursing Your Way to Wealth, where a mental health nurse and an accountant talk about wealth creation, personal development, and financial independence in the UK to help you live the life you deserve.
Hi and welcome back. Firstly, this is episode 88. A sincere apology from me because I'm the half of the Alex duo here that's caused a 33 day delay in us recording another episode. I've had some live stuff go on, which has just meant I've had to pause most things and sort some stuff out. So apologies for that, but we are generally back and expect normal service from now on. A slight change of episode plan as well. Originally, we were going to finish the part two of Ben Felix's paper that he wrote called Finding and Funding a Good Life. We popped that on the back burner because there's been not a little bit, quite a lot of stock market turbulence, volatility. So we were just going to talk about why current global events, the war basically, why that impacts everyday life as we know it, and what it means in terms of stock portfolios and linking those kind of events. And there's another series and a chain of events, and actually why that has changed things for you, and probably why your portfolios are less healthy looking than they used to be. We'll follow the normal kind of protocol. We've got Return on Heartbeats. We'll do the main episode of the show, and we'll do a reasonable or ridiculous as well. But Alex, welcome back. Sorry for the delay, my friend. And actually, episode 88, we're both born in 1988.
Yeah, hi Alex, and welcome back, and good to be back. I was actually born in 1989, but
Were you?
yeah, it's my birthday on Sunday as well.
Oh, happy
So thank you for
birthday.
yeah, thank you.
Wait, so that means if I was born in 88 July, you are
I'm March '89.
you're 9 months younger than me.
Yes,
Oh, okay. My second question after the intro is
I'm sure you look younger than I do.
I don't think so. My other question for you is if you had to hazard a guess on how much £100 was worth in 1988, if you were to link that to today with inflation, how much would you say is an equivalent amount?
What, as in like today's money? What would that
Yeah,
be? I reckon maybe 1988. I reckon prices are around doubled. Maybe it's like £210 in today's money.
not quite. £348, 7 pence. Yeah,
Wow, is that right? Wow. Oh,
yeah.
okay. It's tripled. Three and a half times.
Mad, isn't it?
Wow, okay. And that's actually a good segue into the episode today as well,
Basically, yeah, I thought you'd like it.
because that's inflation essentially.
Yeah, me too. I had a guess before I looked it up before the episode, and I picked like 250, 260,
Yeah.
way
Wow,
off.
that's a lot higher than I thought.
Mm,
Oh, interesting. Oh, wow, that's a fun fact.
of course, go for it.
Yeah, really good. I have a return on heartbeats to kick off on that. So my return on heartbeat. So my wife is actually running the London Marathon this year. So she's doing it on behalf of a charity called Trekstock, who helped her during her treatment. And they're a really good charity that help encourage people to exercise. And they run like online exercise classes and also in-person exercise classes for people that are kind of going through um, cancer treatment. So it was a punt that she would get an entry into the London Marathon. It came as a bit of a shock when she got it kind of towards the end of last year. But that's happening in just over a month's time. And so she's been following a training plan, and I've been following along and doing the training with her as well. And honestly, it's such a nice. I've always run or ran. I've always been a bit of a runner, kind of to that 5-10K kind of distance regularly, but never. And I've done a couple of half marathons in the past, but the this has really been it's a challenge, but really exciting. And it's really nice, actually. We've got a nice rhythm going on. So every Saturday morning we'll be out running and we go together. It's really steady and we got a chance sometimes to talk when it's not too hard, but just been really nice to have that time where we're both working towards a goal, encouraging each other along. So yeah, really wholesome and enjoying it a load more than I thought I would. the weather changing definitely helps, because when it's pitch black at eight o'clock in the morning and freezing cold, you don't really want to be out there running. But yeah, that's my return on heartbeats, and that's for the last kind of month or so that we've been doing the training.
Nice. So you've always. I remember before we've spoken about like you buying running shoes and stuff. You've always been kind of physically active, etc. But just thinking about like 5K to me is a long way. I've probably run 5K less than 10 times in my entire life. But when you compound that out to 26 miles, like that is a long way, and it's a lot of steps, isn't it?
Yeah, so the full marathon is 42 kilometers, so that'd be about 42,000 steps roughly.
It's a lot. It's a lot of steps. Do you regret doing the training with her or no?
Yeah. No, definitely not. I think it's brilliant. And see,
Mm-hmm.
we never do the full marathon distance before you do the marathon. But last weekend we did a half marathon, so that was 21 kilometers. And yeah, we did pretty well, to be fair. It's like 2 hours and 14, I think it was. It's a fairly decent time. And
That's very good. I mean, just thinking about it, like if you were driving a car, like we regularly probably get in the car and we drive 24 miles, 26 miles, sorry, something like that. But I was just working out if you were to drive at 40 miles an hour constantly, a marathon distance would take you 39 minutes. And you're moving at a fair pace, like way faster than anyone can run.
yeah,
I just can't comprehend the amount of paces that is. Um, I wouldn't even get off the start line, which is horrible to think about. And then you guys are running that at weekends as practice.
yeah. But it's crazy. I've really caught the bug for it. I have to be honest. I'm really enjoying it.
Do you think you're going to do a marathon next year, or?
Probably, yeah, we'll see. Maybe not the London one. I think it's a little bit hard to get in, but it maybe one, definitely like a half marathon I would do. That was actually quite a nice distance, and I think afterwards you're not completely drained and need like stretching home. It's you can be done quite like we did it last weekend on Saturday. Then we were out in the afternoon wandering around the town centre. So it's still quite a manageable distance, whereas I think the marathon is you're really done after you've finished one of them. So
Yeah, you're physically, mentally tired.
yeah,
I remember reading a thing before about people hitting like a metaphorical wall during a marathon where you just have to keep kind of pushing and pushing through it. And
yes,
weirdly, my brother's also running the London Marathon next month. So it is possible that for some period of time they might run alongside each other.
yeah, that would be yeah.
Yeah, so if you see a guy who looks vaguely like me, he's a bit taller than me. Yeah, and it's also his birthday on the day that it's kind of his stars have aligned where you get an entry and run it and it be on his 35th birthday.
Yeah, that's
Um,
really good.
Serious amount of miles. But yeah, I'm impressed that you did the practice as well. I think if my wife said, "Will you run the marathon with me?" I'd probably say yes, but I'd probably hate every pace of that. Um,
Yeah. No, I honestly found it's weirdly addictive. I'm quite looking forward to it actually on Saturday.
Last question on marathons, and then we'll move on because we're kind of 8 minutes or so. Do you ever feel weirdly kind of good or happy after running?
Oh man, all the time. Yeah. It's like the runner's high.
And that, yeah, so your brain produces cannabinoids at, after like vigorous exercise, and that's where the runner's high comes from. So it's a similar compound to
Uh,
cannabis, but your brain produces it naturally as
ah,
a cannabinoid. So that's literally why you get runner's high.
oh wow, yeah. Yeah, I definitely have that.
Yeah, and which is why people describe it as addictive. Um, because it
Ah,
literally makes you feel better.
like you're taking a drug.
Well, yeah, I mean, obviously, not suggesting you compare,
No.
but it's a similar brain region and it's a similar compound produced in the mind. Yeah,
Well, that's
yeah,
learn again something new every day.
yeah. Maybe all people who run are just deep down searching for the kind of dopamine that cannabinoids give you.
I'm too tight to buy drugs, so I'll go running.
Yeah, that's it. I'll just
Yeah.
spend hundreds of pounds on trainers
Yeah,
and hours of your life
that's it.
at weekends. Yeah, no, that'll be good. I'll be super interested to see how her marathon goes, how she finds it. And you hear some people say, like, I've run a marathon now, I'm never running again. That's it. I've achieved my goal.
Mm,
I'm putting my shoes away. That's it. And other people do many of them.
yeah.
So
Yeah, so it'd be interesting to see. Yeah, similar. Excited to have her finish it.
yeah, cool. Okay. So the main episode kind of body of the show, it was initially your idea to kind of explain why, like we all know that there's global events going on, there's wars happening in the Middle East, and stuff is different and dangerous depending on where you're living. Luckily, we're insulated from the actual danger, I guess, living in the UK, but we feel a little bit of the ramifications in terms of inflation, stock market movement. So your thinking then is just to try and explain why some of these things are linked.
Yeah, that's it. And I think because it was, I think, a couple of weeks ago. Well, as soon as we stopped recording the podcast, we had that break. The world seemed to have gone into chaos. So maybe there's something correlated to us recording that keeps the world in order. So hopefully things go back to normal. But um, the what the thing I wanted to talk, because people will see on the news, obviously the US attacked Iran and now Israel attacking Iran, and I'm not here to talk about the political ramifications or anything, but people will have seen that the stock markets have gone down. Potentially, if you're looking to remortgage, the rates now that you can remortgage out are a lot higher than what they were this time, kind of 4 or 5 weeks ago. Just to, I think, try and explain how that's connected. So, if we zoom out a little bit from where the kind of the Russia when Russia invaded Ukraine, which was over 4 years ago now, which is also crazy. The There's a huge spike in gas prices, and that's because in Europe especially, we rely heavily on foreign imports of gas and oil. And not just that, the world is still very dependent on fossil fuels, even though there's a huge push for um, moving to renewable, that we still use billions of barrels of oil every year in producing things from not just fuels, but they're used in processes, in machinery, they're used to make things that they go everywhere, plastics mainly. Um, and so we're huge consumers of fossil fuels. And so there's a huge spike in inflation after Russia invaded Ukraine. And that's because there's no supply. And all the demand is still there, but then the supply goes down and then the price goes up. And it took a couple of years of unwinding that. So inflation did start to cool down. We also had the pandemic. All of the governments pummeled loads of money into the economy to hold it up, and so you kind of had loads of money being printed, which increases the supply of money, which then pushes you increase the supply of something. It then reduces the value of it, and then so that caused inflation. So did the Russia and Ukraine, and then that kind of started to work out of the economy over the last couple of years. And so we were on like a fairly nice path where interest rates from the central bank started to come down again. You'd have seen that in the UK central bank, our interest rate went from like 5.25, I think it got to like now is 3.75. And we were on a kind of nice trajectory to bring that interest rate down. Interest rate is really important for stocks and shares because you want a lower interest rate environment because and I won't go into loads of detail, but the way that companies get valued is you look into the future at what all of the income that company is going to produce, and it kind of they do this thing called discounting. So you'll discount all of that to be like, well, what's the price of all of that future revenue worth today? And the lower the interest rate, the actual more is worth more. And all of that had been priced, almost low interest rates and future interest rate cuts had all been kind of readily accepted by the market that that was going to happen. So fast forward now to the US started to bomb Iran, and then the Strait of Hormuz, which I think is like a third of the world's oil, goes through that. Like I think it's 20 meters wide, and it's almost like the main artery of kind of to where oil gets an energy gets passed around the world, and suddenly you can't transport anything through that. The price of oil, therefore, there's a huge amount of the demand is still there because we still use loads of fossil fuels. The supply has come down, and as a result, the price goes up. So I think if you look at the oil price, it was about $60 a month ago, and it's now about just under $100. Because that then flows into everybody's, like, whether that be, it's used in processes to make food, it's used obviously to fuel your cars, it's an aviation, to fly planes, it's used in so many processes. And that what people then worry about is, well, we're now going to start seeing that inflation come back. And the only way that the only tool that a kind of central bank has got to help control inflation is they use interest rates. So the higher the interest rate, you kind of cool down demand for products because things are more expensive. And it kind of what's happened is we're on this nice path to get down to kind of interest rates come down steadily, inflation's coming down. We're getting to that kind of nice, kind of what they call Goldilocks part, like Goldilocks economy. But unfortunately, there's a huge shock that's happened, which is starting to then lead to a lot of this reduction. So conscious I've been rambling on, but that's kind of hopefully makes sense. Do you have questions, Alex?
I do have a quick question. Yeah. So, sorry to disrupt your flow, but so what I'm hearing, and correct me if I'm wrong, is we can apply that to our human brain. Like our brains don't like rapid change. We're not used to it at all. So if one day we go into, say, the supermarket, for example, and your favourite loaf of bread is £2, something like that. If the next time you go in it's £2.5, you're probably not going to notice. Like it's not going to be a reference point for you. But if you go in and it's £4.50, you'll be like, why has this changed so much? So it's a point of our brains sharpening on the change and understanding why that's important. So the use of oil for the world, I think it's understated in how much we use of it and how many millions of barrels we go through. There's a really good book on the material world it's called Material World by a chap called Ed Conway. I think he writes for the Telegraph or something.
Oh yeah, he was a Sky News editor, I think, wasn't he?
Yeah, so he's written a book on these 6 materials the world uses, and one of those is oil. The others are sand, salt, copper, iron, and lithium, I think, if my brain has called them back correctly. But when we don't have access to those kind of things, it does throw the world into a little bit of change, and we don't deal with change that well. So you remember when everyone panicked that there was going to be a fuel shortage, and people are like, oh my God, I've got to fill all my cars up. And that actually caused the fuel shortage there. And the people who organise these things, BP or whatever, they're like, actually, we have enough reserves, so don't panic. But it's too late by then. Everybody had already panicked. And that panic, that anxiety, the stress in the brain is like, actually, I need fuel right now to run my life. If I can't go to work, what happens to my house? What happens to my family? And that's why we really feel that quite strongly. And the other point, Alex, is I've never looked at a map of Iran or like Saudi Arabia or any of these other countries that are around there. The Strait of Hormuz is like a bend.
It is.
Near the United Arab Emirates. It's like a chicane in Formula One. It's really like quite thin. And it's between Iran, like Saudi Arabia's there, Oman, United Arab Emirates as well. And it borders countries like Pakistan, Afghanistan, Iraq, etc. And Iran's actually bordering, it's like the joining piece between Afghanistan and Iraq. There's water on 2 sides of Iran. There's 2 small seas. And actually, if all of our, not all, but most of our oil comes through that's probably the busiest shipping lane in the world, isn't it?
Yeah, I think it's definitely, it might be if not one of, it's certainly one of. But yeah, I remember reading it, about a third of all the oil goes through the Strait of Hormuz. And I think the point of, I think we really underestimate how much we still use oil. It goes in everything, which is exactly as you said. And I think also one thing you mentioned, which I think is really pertinent, is that we don't like change and we don't like rapid change. And I also think there's something of, and I don't know if there's a psychological term where you kind of you always think the worst or like the extreme might happen. And
Negativity
it,
bias. Yeah.
yeah, because it was funny. We were chatting just before we started recording about this time last year. We were talking about the Trump tariffs that came in kind of out of nowhere and how March seems to be our worst month of anything. And so in that case, it was Trump's announced all these tariffs. It's a huge surprise. The stock market's tanked because people are just, I think, almost end up thinking, well, if this is the new world, and then there's going to be a huge recession, and over time it kind of works through as more and more information gets digested by the markets, and then it kind of steadies again. And I think I was doing a bit of research on oil shocks because I think there's been quite a few actually, but during the 1970s, I think there was one in the early 70s and one in the mid 70s, like 1974, I think, and that was one of the worst decades for kind of investment returns ever because there was a huge oil shock, there was really high inflation, central banks put up interest rates, and then there was a global recession off the back of it. And it was essentially your return for that decade for stocks was negative for the whole 10 years. I think it's a really bad environment. And I think we obviously hope we don't get there, but that might be one of the reasons why there's a huge reaction because people know, well, 50 years ago, this happened and it was, I kind of want to get out and I want safety. But bonds had a bad decade, stocks had a bad decade. There was kind of nowhere to hide in that kind of horrible stagflation environment. And so I think there is like this extremist worry that comes through at the sign of the news.
Yeah, and you will remember that. Like we remember negative things. It's part of your brain's called your amygdala, which is your fear center. That's the bit that's keep you alive, keeps all of your parents, grandparents, etc., all alive. And it's really what that does is it shuts off your prefrontal cortex, your rational thinking at that point, because you don't need to work out maths or to think rationally if you're running or fighting for your life. So that's why negative news sells, because we're primed to notice the negative. Because if you miss one negative, you could die, essentially. Not necessarily in the current society, but way back when. You take a wrong step, you eat the wrong thing, you wander off from the pack, your chances of survival are less, and that's what we're kind of do is to survive. So it's an inbuilt thing. Your brain's made the decision to run before you've even started running. It's filled you full of adrenaline, and you start moving. And that's where we hear people can do superhuman things. The other thing, Alex, I was going to pitch to you, and this might be way off, right? So my parents, born in 55, both of them. And by the time this happens in 74, they are, what, 19, 20, maybe? And they're kind of moving into the world of work. And maybe we'll talk about investing. And if that's your first experience of actually you've moved out of home, you've got your job, you've set the business up, or whatever, in that time frame, if everything is negative at that point, you're going to be like, actually, I'm probably not going to invest. That's dangerous. And both my mum and dad would be like, we don't do investing. It's dangerous, or I don't trust it. I like property instead, and a lot of other things. But that's probably why people of that age group, we'd call them boomers now, are reticent to even consider the stock market because those beliefs are so firmly held because they've lived through, say, 9, 10 years of what sounds like absolute carnage.
Yeah, and I think it's so true. And I think I've read a book. I can't remember the exact which one it was. I've been reading a load recently, but that definitely came up in that it does have an influence over like the decade you were born or the decade you kind of started working and how that influenced your future investment decisions and that kind of asset allocation. And it's like if you were born in and you'd experienced almost the boom market, um, kind of in between 2002 and 2007 and 8. That was a huge boom period after the collapse of the dot com bust thing. That was a really good. But then if you were to start working just after the dot-com crash, you've seen or just before it, so you've seen everything going up and up and up, and then it all crashes. There's a recession that then influences definitely how you invest in the future. My parents are the same. I think there's probably, I don't think it's the only factor, but I think it definitely has a factor because the only time they uh, started or tried to invest, they had a financial advisor decades ago, and that put them purely into a Japan fund. So they had no other investments at all, but then they bought into like a Japanese fund. And
Not very diverse.
no, exactly. And then because Asia shares were booming, and then Japan shares fell, and I think it took them about 15 years to recover. Um, and that
Hence the mistrust of the market.
absolutely. And now, so they've just done property and cash is their only two assets that they hold. But I said, why were you just in Japan? Like, it's such a random thing.
Yeah, it doesn't make sense from our point of view, does it? But
No,
if you don't know these things, if you get what sounded like regulated advice from a proper person who knows this stuff, and then that
yeah,
happens, I think I'd probably feel the same if I were in their shoes.
yeah, absolutely.
Yeah.
I agree, and
Mm.
I don't blame them for that at all. It's so odd, and you rely on advice, and obviously it wasn't the best advice. So
No, I wonder what that guy or lady is doing now.
yeah, who knows? Hopefully, yeah, she wasn't all invested in Japan either, and has come back. But yeah, I think it's those when people talk about stock markets, it's the fear and greed is really the two emotions that drive the short term prices. And I think what we're seeing now with, the US is attacked, the Strait of Hormuz is closed, that means there's going to be really high inflation for years to come. That means interest rates are going to be high, there's going to be a recession, there's not going to be an end to this war, and that's it. It's kind of we're only seeing one side, and it could be in a week's time that the conflict finishes. Who knows? But I think what we're seeing, and I think that the connecting points of the oil price has gone up, and therefore interest rates have gone up because people don't want, or interest rates have been held, I should say, rather than they haven't been reduced as expected. That then, because the stock market's in the short term, especially, is all about future. It's looking forward and what are the next earnings going to be, and those are the things which are driving the prices, and ultimately the interest rate plays a big part in that. And if you look at some of the like, like house builders have been hammered recently. Some of the big companies with a lot of debt get hammered. Like it's not pretty out there, but this is a volatility that often people speak about with stock markets. And I think my only thing, like points of advice, would be try not to look at your portfolio if you're worried. Think about the longer term. If you really want to look at, zoom out on the last 30 years of any of the stock markets, and you'll see that they've gone up, but they're very volatile during short time periods. And it's just about being patient and being disciplined and continuing if you can, and is your plan to keep buying into and keep investing. And yeah,
Yeah, I think stick to the plan is the main thing. Like you make
yeah,
these decisions for
absolutely,
the long run. We're not kind of short term trading. We're in it for multi decades to build wealth.
absolutely,
And a good example of this is like remember how COVID felt and people weren't going anywhere and like all the things were around us were negative and the stock market drops 30, 35%, something like that. And it felt really painful at the time to a lot of
yeah,
people. A lot of people on paper lost a lot of money.
yeah,
But then you zoom back out and you look at it at a broad picture. If you look at any kind of stock investing like portfolio, like graph or something for the last 100 years, you'd be hard pushed to find the dip that was COVID. If you look at it for 10, 20 year kind of timeline, yeah, you can see it, but it doesn't look as bad on paper when you've zoomed out. So eventually, like we thought everything was going to change, but the world moves on. We get through these things with inventions, with solutions to stuff. And actually, it's the worst thing to do is to sell out now and solidify your losses, like leave the money in to run. But it's a good example of why you don't hold your short term cash in the stock market and why you need an emergency fund. The last thing you want to be doing is taking 5, 10 grand out now to pay for a boiler or a car repair or something like that. So leave the money compounding for as long as you can. And unless you absolutely have to, just don't touch it, leave it be.
Yeah, could not agree more. And I think that point of this is exactly why there's emergency funds. This is why
Mm-hmm.
if you've got something big that you need to pay for, maybe you're saving up for a car or something, like having that as a separate account in cash, like you can't be reliant on it on the stock market if you need something in the. I think they say within it has to be over 5 years at least is your
Yeah,
time horizon. And it's almost the way I also try and look at it is that's not my money. That's my money when I'm like 45.
it's future use money.
It's
Yeah,
future me. It's not me. So
future family.
that's right. And it's just one of those things. But I think it can be unsettling
Mm-hmm.
when you see all the volatility and there's a huge amount of news around it. Um, but I think it's just about, staying steady, keeping calm, and yeah, doing exactly as you said, just stick to the plan.
Yeah, being able to weather the storm. I think so. I used to look at. I wrote a one-page plan, like financial plan, which is a nugget of wisdom from Andy Hart, who runs Maven Advisor. He was like, write down your one-page plan, put the date on it, and sign it. And I actually wrote mine in December 2019 when I started to put some money into the stock market to get it to work for me. And I've looked at it a couple of times during COVID when I was like, oh, got some emotions, felt some ways about stuff because I was like working in hospitals, gowned up, masked a lot. And I was like, actually, is this going to get any better? But when you look at I find it reassuring because it's in my own handwriting, etc. And I stayed the course, and it's actually treated me very well. So, of course, as well, we're hugely insulated from this. Like, it's a very different story if you live in Iran or you live in a country that's actually war torn.
Yes.
We're very fortunate to be thinking about this in a theoretical point of view rather than a fight for your life actual point of view. And it's horrible to hear for those people who are affected.
Yeah, I think that's a really good point. And yes, we're here talk, the people getting blown up, and we're like, how would you best manage your portfolio? Because it's going to be really volatile over the next year. So
Yeah, that's a good problem to have, isn't it? Compared.
yes, so I think that's a really good point. Yeah, and I agree, obviously, wholeheartedly with that.
Yeah, I mean, back to thinking about money, etc. People say within this field, the best time to buy is when things are cheap and they're on sale. So I know we don't advocate timing of markets. Do you do you ever have like a spare pot of cash to put into the market to put to work when these kind of things happen, like the stock market goes down and you can buy more for your money, or are you just a straight monthly like dollar cost averaging?
Yeah, I tend to have a little bit of cash in my kind of in my account, but not. It's like kind of low thousands. It's not like I've got 50 grand sat on the sidelines for it, but most
Mm-hmm.
of it is from yeah, just monthly, day to day kind of salary savings. So, and it's quite helpful. I get paid at the end of the month. The money goes into my account, and then the way that my brokerage works is there's like one day of the month that they trade. So you set up what you want to buy. So I'll set up where I want my money to go, and then on that the same day it just goes out. It's called it's interactive investor, and it's their regular investing scheme that they do, and so that's so I'm not having to like pick days either. It just goes in on. They have one day a month where interactive investor buys everybody's shares on their behalf, and so it's quite helpful in that it just does it on that day. So
Yeah, takes the decision out of your hands and out of your head.
exactly. So all I have to do is just make sure I've put in my money, and then just I know what I have like the preset amounts that I put into each of my kind of index funds and shares or whatever. And then if they've got any extra, you can like top up that regular investing. So I find it quite good. And I know then, I think this month it's the 1st of April. So on the 1st of April, everything, no matter what the share price is doing, it buys it at that point. So
Yeah, and regularity. It takes the decision out of your head because there's if you had to look at it and be like, okay, here's my regular monthly contribution. What day should I put it in? Your brain's going to be like, oh, I don't know if now's the best time. maybe it's tomorrow, maybe it's next week, maybe I won't do it, and your brain will trip you up basically if you give it all of those tasks to do, because you're trying to predict unknowns, and that's impossible. But humans are not good at that.
Yeah, precisely. So it's just like I know what I'm buying. I put the money in, and it just does it. And you take that. Ooh, should I wait for another day or two? Or ooh, maybe I'll just sit out this time. It's just it goes in,
Yeah, that's it.
and that's it.
Job done.
So, and I think it's a big thing. Takes a lot of stress out as well. So I like it. I like the platform and I like the process. So
I've got one other
yeah,
theory I want to run by you. It's not a theory, it's an idea or a hunch, maybe, or just I've linked some stuff together that doesn't make sense. This is happening in March. Last year we had the tariffs in March. This may be way off piste, but do you think it's got anything to do with longer winters in the northern hemisphere and people not having enough vitamin D in their body, and then they're having a real torrid time of it, and they're making snappy, irrational decisions?
it's funny. I was thinking this before the podcast, not necessarily about vitamin D, but I just thought, why is
Mm.
it like suddenly you get into spring and then Donald Trump wants to do something to the world, and it's like it could be coincidence, but maybe it is like yeah, long dark winters and just yeah, I don't know.
Yeah, and he's not delusional. He's just suffering from seasonal affective disorder, and it's heightened in March. And then he makes these irrational decisions. That it seems.
Yeah,
Um,
that's it. Or it might come out of it. Oh, finally it's spring. I need to do something now, and I'm going to put tariffs on everybody. That's what I'm going to do in March.
Comes out of hibernation like a bear, and he's like, right, I'll start signing stuff.
Yeah. So yeah, there could be something there, but yeah, it'd be a hard one to prove, I'd imagine.
Yeah, it would. I mean, sample size 2 years, or two
Yes,
incidents of a thing, of a decision. We'd have to test his blood as well. Probably wouldn't allow that. Anyway, right. Do you think we've covered like why things move, both oil and stock and decision making, etc.?
I think I hope so. I think to a certain level, obviously, there's people that do PhDs on this thing. But I think it'd be great to hear from any of the listeners if you've got any different thoughts or questions. But that was kind of my take on why things are moving the way they are.
Yeah, and it does make sense. I think it's a good idea to not look at your portfolio, like put some extra in if you can. Um, just get on with life. But I think it's a good reminder that actually good financial practice could insulate you from stuff like this. Um, and if it is biting you and you are struggling with things, you have to sell some stocks when they're worth a lot less than they used to be worth, and it's cost you some extra. Use it as a lesson, and try and shield yourself. Certainly next year
That's
is
it.
ongoing as well. Okay.
Yeah.
All right. So we'll close the main body of that. So next up we have
reasonable or ridiculous.
you, and then a short summary.
Yes. So my reasonable or ridiculous. It's actually on behalf of my wife.
Okay.
Uh, so is it reasonable or ridiculous? So she now does dog sitting, probably a couple of days a week. Not really for the money, but she likes dogs, and she's one of her longer term plans once we get kind of financial independence. One of her career changes she's considering is becoming more of like a dog, becoming like a dog trainer, but like doing the formal qualifications and things. So, but it is quite a lot of work. When we had one here actually today, whilst we were both working from home. It's a very nice dog, but it's about, and we've got one tomorrow, I think, as well. But through the platform Rover, which is a pretty cool platform, but it's also amazing how people are willing to pay a lot of money to get people to look after their dogs. But it was probably reasonable or ridiculous to do that when you're probably getting paid about 30 quid for the day to look after someone's dog. So they will bring all the food and the toys and stuff. You just are dog sitting, and you can take them out for walks, and most of them you can leave in the house if you need to pop out, although we've not had to do that yet. But I'd be keen to hear your thoughts as well on that.
Yeah. I mean, when you think about it, if you're both working from home, the 30 quid you'll get paid it's not £30 an hour, is it?
No, I wish I would quit my job.
Yeah, you'll have 50 dogs in your house.
There would be more. Yeah, it would be unsafe.
Yeah. Yeah, welcome to the pack. This is my 99th dog.
Yeah,
Yeah, so it's not for money, is it? Right? You guys are going to earn way more than that,
yeah.
which is generally working. I think if you enjoy it and you get some, it's like another avenue of life, isn't it? It's like dogs are always, to me, non-judgmental. They don't care who you are, what your house is
Mm,
like. They'll just love it because they're just excited. So I think if you get some, if there's any level of enjoyment for you or for your wife, then absolutely do it. If it turns into a slog and you're like, oh, I've got another dog coming, actually, I wish I could go out instead. It's probably not worth it. So I would say do it while you enjoy it. And the beauty of it is you can stop when you don't enjoy it.
yes, absolutely. And because we really want to have dogs as well at some point in our life, and I think it's
Mm-hmm.
right now we just couldn't have them, but this is a really good trial to see as well, kind of on
Yeah.
to get real due diligence on a future
What does it actually look like
almost life decision. Yeah, yeah,
to have a dog? Oh, I mean, I can provide a bit of input on that. So my wife and I have a dog. We've inherited a cockatiel from her grandparents as well. They are great. They do cost us, obviously, in terms of vet bills, money, dog food. We spend money on dog food, like insurances and things. They mean you can't just drop everything and go to Malaysia for 3 weeks in January, should you wish. You
yeah.
have to plan around that. You have to hire a dog sitter or whatever. But they bring us so much joy. Like the other day, it was Tuesday, we finished work a little bit early and we walked our dog by the river in the sun. And it was great. And we really, really enjoyed it. And my wife and I have actually, she did a lot of this before I met her. We fostered and found new homes for, I think, 106 rescue dogs now.
Oh,
So
wow.
yeah, I don't think I've ever told you that. We're very used to having dogs and things.
I think I knew that you'd done it. I didn't know it was to that magnitude. That's amazing. Wow.
Oh, it's a lot, yeah. So we've had like 4 or 5 dogs here at a time, and it's been pretty hectic. So having just like one, maybe two at a time would help. I don't regret doing that at all. It was really good. We found a lot of dogs that need loving homes, which is brilliant. Um, I don't think I'd do it as a full time business, maybe not now, but I do see it in our future that my wife will like convert some kind of building and a
Yes.
garden in a
Yeah,
future
yeah.
house into like a kennel. But it will be heated lights, cameras, all sorts of fancy stuff. It's not just going to be
Yes.
like a little shed outside. It'll be over and above, and I can guarantee you it won't make as much money as it costs.
Oh, well, that's really nice
Yeah.
to hear, actually. No, I had
Yeah, but what a good thing to do. If she likes it and you like it and you can do a little bit of science, do we want to have a dog? Do we not?
absolutely. Yeah, so for now we're enjoying it. So we had a whippet today, like a
Nice.
9 month old whippet who is almost like Bambi on ice because they're all legs.
Yeah, that's it.
And then yes, tomorrow we've got it's a Bichon Frise crossed with a poodle, a toy poodle. It looks like a teddy bear.
Mm. And do the owners of the dog just drop it off in the morning and they're just like, here's my dog, bye?
That's right, yeah. So they've come before to kind of see the house and meet us,
Yeah.
and then they will drop the dog off and then pick it up at prearranged time. And then we just have a dog
Mm.
wandering around. Usually they follow you like they're on your heel, no matter where you go. So,
Yeah,
but
yeah.
yeah, it's very nice and we enjoy it. But yeah, it's all through. So my wife kind of set up the Rover account and started it, and yeah, she's doing really well from it. She's enjoying it, and but yeah, we'd love to get. Yeah, it's good to get your opinion on
Well,
whether you think it's reasonable or ridiculous. But
I think it's entirely reasonable
perfect.
because I'm very much a dog person. If you ask someone who doesn't like dogs, they'll be like, no way.
Yes.
But you get to meet loads of cool dogs. Like you're getting paid a bit for the privilege as well. And if the dog's nice and it kind of settles and it just sits by your feet after you've walked it or
Yeah.
something, like happy
That's it.
days. That's great all
Yeah.
round. You get all the good bits and none of the vet bills.
That's it. Yeah. That's a good summary.
Entirely reasonable for me. In fact, it kind of makes me want to do that now. But if I pitch that to my
Yeah.
wife, we'll have just like 8 different dogs here every single day.
But yeah, it's good. Rover, the platform, it's pretty good.
I'll have a look. I'll
Thanks
have a
for
look
getting it.
and
Yeah.
we'll report back. Okay, do you want to do a super quick summary?
Yes, I can do a summary. So, started off, so return on heartbeats. So that was me doing the marathon training with my wife, which is going really well. The main body was just talking about kind of the impact of kind of some of the global events that we're seeing around the kind of war in Iran and how that is impacting oil prices and then subsequently impacting interest rates and therefore the stock market. And so they're kind of all interlinked. So um, the world still uses a load of oil. It's still really a key resource that is being choked off is that supply because of the war. So the Strait of Hormuz, the 20-mile strip, which is now closed off, and therefore there is no more supply of oil. And as a result, the price goes up. That price feeds into nearly everything that we consume. And as a result, inflation starts to go up. The central bank's only real kind of mechanism against inflation is their interest rate. We were on a nice steady path of reducing interest rates. That is no longer the case, so they've all been paused, and the banks are warning that inflation is going to keep going up. Because of that, interest rates staying as they are, all the people thought the stock market, all the companies will get valued essentially using an interest rate as a baseline. That is now higher than it was and was expected. So the share prices start to come down. There's also a huge amount of panic around what kind of world are we going to be into. There's a lot of extreme kind of negative bias on those. And so it's all interlinked. And I think if we have this conversation in 6 months' time, hopefully we're talking about that small blip of the oil shock that we had in March. So we'll see what happens there. And then finally, just around reasonable or ridiculous, my wife has started looking after dogs using the Rover platform, and I think all considered, it is a very reasonable thing to do.
Yeah, what an excellent summary. You've written down every point I kind of have noted here. Last question about this dog thing, right? And then I'll leave it be. Did she tell you in advance, or did she just be like, guess what?
No, that's how she told me about the marathon. Guess what? Yeah,
Guess what? I'm running the marathon. I'm just imagining like one day, a Tuesday, you're working from home, and she just opens the door and she's like, "Look, a dog."
a dog just turns up. Yeah. No, it was definitely a thought through and considered decision to do it. So there was agreement. So yeah, we didn't just have
Yeah.
a puppy whippet show up at the door on a Wednesday morning.
He's like, guess what? I've done some running. I'm full of cannabinoids. I've decided we're doing dog sitting. Here's our first one, and I'm going out.
This is it.
Yeah.
Yes. So no, we planned
cool.
it, and we have like dog bed and stuff and toys. So we because we look after my kind of mother-in-law's dog
Nice.
quite frequently as well. So we had all the paraphernalia. So it was fairly new. It wasn't new to us. But yeah, we did have a conversation about what that would mean. So
yeah. Oh, cool. Lovely. Well, that's been episode 88. Have you got any thoughts, questions, or feedback in general? You can drop us an email. It's nursingyourwaytowealth@gmail.com. Alex, if you could send us a link, or send Caspian, our editing chap, a link to the charity your wife's running the marathon for, and I'll make a donation. And if anyone listening, if you want to drop a couple of pounds in there for Alex's wife, pounding 26 miles of streets, and also you've done the running as well, then absolutely do that as well. It's for a worthwhile cause. But Alex, thank you for your time, and I'll see you next week for episode 89. We're getting scarily close to 100.
Thank you. Yeah, appreciate that.
Yeah, we'll have to have some kind of
that'd be a big milestone.
Music, sounds, party poppers or something for the 100th one.
That's it. Thanks again, Alex. And great to speak to you. Thanks everybody for listening.
None of what we discuss on the show is to be considered financial or health advice, and we recommend you always do your own research or consult an independent financial advisor or a doctor when making your financial or health decisions.